Unbelievable. Recently, Raoul Pal dropped a bombshell. He actually sees Bitcoin at $850,000 per coin.
That would bring Bitcoin to $850,000.
Larry Fink expects $700,000 per Bitcoin. And according to Raoul Pal, the current crypto market has only just awakened. His message: we are in a phase that resembles historic bull markets like 2013, a year that catapulted Bitcoin from 100 to 1,000 US dollars. But this time everything could become much, much bigger. So Raoul Pal paints a picture that takes investors' breath away. Despite nerve-wracking sideways movements that we've seen, and occasional crashes of up to 35%, he sees no reason to panic.
I know that people get frustrated in sideways markets. It's just the nature of the game. Nothing happens. It corrects for a while, and then suddenly breaks free. And we are now in this phase, which I will talk to you about. This has, and I will show you these charts later, the most astonishing correlation of all time to all assets.
On the contrary, the indicators are whispering what the masses have yet to hear: the government debt cycle, the flood of cheap liquidity, and a pattern that has repeated since 2017, all point to a perfect storm. And let's take a look at all of this. Now, Raoul Pal explains that we are still far from the peak of the current cycle. The indicators are showing comparatively low values, similar to 2013, which was just before the greatest bull market of all time. He emphasizes that he can't guarantee anything, but from a probability theory perspective, the signs are positive. There is no reason to be afraid, because the pattern is repeating itself. This is a typical debt cycle, in which governments and institutions replace old debt with new debt, and the liquidity cycle drives the dynamics. He compares the current phase to previous banana zones, correction phases like those that occurred in 2017, 2020, or 2021. Back then, each correction was followed by a new upswing, and you can see exactly this pattern repeating itself now. The technical, macroeconomic, and sentiment data all indicate that the market will soon move into the next phase. His advice: stay calm, don't make risky decisions, don't use leverage, don't let FOMO, the fear of missing out, guide you, and store your tokens, that is, your cryptocurrencies, securely. And according to Raoul Pal, the next major correction could amount to 35% and unsettle many investors. But Pal believes that this would not yet mark the end of the cycle, because due to the delayed effects of interest rate policy and the slow movement of liquidity, he expects the entire cycle to end only in the first or second quarter of 2026, which would coincide with political events such as the US midterm elections. His conclusion: keep the faith, stay disciplined, and don't let yourself be scared off by short-term panic. According to Raoul Pal, the upward path is far from over. And if you now want to achieve financial freedom through crypto, want to learn about Bitcoin, want to learn about crypto, click the link in the description below the video. Watch the video, it's free.
We are far from our cycle peak indicator, which itself is still a long way off. In fact, we are at very subdued levels, similar to 2013, before the biggest bull market of all time began. Well, I'm not guaranteeing that, but I'm just saying, probabilistically, the outlook is very positive. I see no reason to be afraid. Finally, the much talked about supposedly trivial zone chart. The construction is the same. It's no secret. It's a repetition of the debt cycle. They roll over the debt. They do the same thing. Every cycle has nothing to do with a halving cycle. None of it. It's all driven by the liquidity cycle and the financing of debt. In every phase, we reach phase 1 of the banana zone. Banana number 1, the correction zone. Banana number 2 comes next. Another correction, banana number 3. So that's the banana zone. That's how it happened in 2020 and 2021. Here we go. Sorry, that was 2017, which again looks very similar to this one. That was the last time. For me, it's clear. I've shown you the macroeconomic evidence and the technical evidence, the sentiment evidence. Everything here, to me, points to the fact that... Hold on tight. Don't screw it up. Don't lose control of your tokens. Don't use leverage. Don't let your wallet get hacked. Just deal with it. Be careful. Don't get FOMO. Do everything right, and we'll move on to the next phase of corrections. That will be harder, Because next time it happens, we'll have a 35% crash. And you'll all be asking, is it over? And you'll be absolutely sure that it's over. And everyone on Twitter will tell you, it's over, but it won't be over. Based on our work, we suggest that due to the extension of the economic cycle, because interest rates stayed higher for longer, the forward-looking liquidity indicates this. Again, speaking probabilistically, with no guarantees, the whole thing extends into Q1, maybe Q2 of 2026, which coincides with Trump's attempt to win the midterm elections as well. So everything is set up for us. I think it has already begun. So keep the faith.
Because this is where things get exciting. While real estate, stocks, and gold become the playground of the wealthy, millions are fighting against an invisible tax of inflation and currency devaluation. Raoul Pal reveals how Bitcoin and other cryptocurrencies are breaking this system, delivering returns that overshadow anything we've seen before. His comparison is explosive. Since 2017, for example, the Nasdaq has crashed by 99.94% against Bitcoin. According to Raoul Pal, crypto is a supermassive black hole that devours traditional assets. And this is just the beginning. With a forecast that even makes skeptics sit up and take notice, Raoul Pal outlines a scenario in which Bitcoin could climb to as much as $850,000, and time is running out. By 2026, driven by interest rate policies and the US elections, the greatest financial experiment of all time could be unfolding right before our eyes. The question now is not if, but when and who will keep their nerve when the next banana zone strikes, i.e., when we see extremely rising prices. Raoul Pal explains that about 90% of Bitcoin's price movements are linked to global liquidity developments. He describes this correlation as one of the clearest there is. At the same time, monetary policy also influences the Nasdaq by 97%, which shows just how closely financial markets and central banks are intertwined.
So 90% of Bitcoin's price movements are driven by overall liquidity, and 97% of the Nasdaq.
And Raoul Pal describes a fundamental problem. While tangible assets like real estate, stocks, art, or gold keep getting more expensive and are mainly affordable for the wealthy, young people, or those with low incomes, struggle with stagnant wages and rising inflation. And this dynamic acts like an invisible tax of around 8% per year, combined with global inflation of 3%, which together leads to an annual devaluation of money by about 11%. For many, it is almost impossible to keep up since traditional investments rarely offer such returns. And this is exactly where, according to Raoul Pal, the strength of cryptocurrencies lies. They break through the system and offer a chance to escape the vicious cycle of debt and currency devaluation. And according to Raoul Pal, Bitcoin follows a clearer pattern. In the long term, after phases of correction or sideways movement, there are often sudden, explosive price jumps. And currently, the market is exactly in such a transitional phase, and Raoul Pal is convinced that there is still plenty of room for growth. According to his calculations, in an extreme case, Bitcoin could rise to as much as $850,000 per Bitcoin at 2 standard deviations from the long-term trend. Although he considers this scenario unlikely, it underscores the immense potential of Bitcoin and also of cryptocurrencies in general.
So here is the real problem. Why do the rich get richer and the poor get poorer? Well, scarce assets keep rising in price. That's why so many young people have turned to crypto, because crypto completely upends this system. So they are pushed into more speculative, riskier assets that offer much higher returns. It's the only way out of the trap. And the trap is driven by this devaluation. But if it were to reach 2 standard deviations, that would put Bitcoin at 850,000. I don't think it's going to get there, but what we're saying is that there's still a lot of upside potential. I know that people get frustrated in sideways markets. That's just the nature of the thing. Nothing happens. It consolidates for a while, and then it breaks out explosively. And we are now in that phase, which I will talk to you about.
He emphasizes that patience is key. Sideways markets are simply part of the process, but history shows that such phases are always followed by new highs. His conclusion: despite short-term uncertainties, Bitcoin remains uniquely undervalued, and for many, the only way to escape the system of permanent monetary devaluation.
When we talk about currency devaluation, it's not so easy to see, but up here, well, these are all the asset classes that we monitor. And you can see that most returns from US, small caps, rates, government bonds, preferred stocks, and high-yield bonds all annualize at less than 10% per year. Crypto outperforms everything else by far. It is the best performing asset in all of recorded history. We've never seen anything like this before.
Raoul Pal explains that many other traditional investments yield annual returns of less than 10%. Due to the ongoing devaluation of money, investors are actually losing value in real terms. Even the S&P 500, which at just under 12% per year barely keeps up with the inflation rate, offers hardly any real gains. It's only with technology investments and especially with cryptocurrencies that you start to significantly outperform this benchmark. According to Raoul Pal, crypto is by far the best investment in history. Since 2012, Bitcoin has had an annualized return of 130%, Ethereum 113%, and Solana 142%, and that's despite massive price crashes in the past. According to Raoul Pal, Bitcoin alone has risen by over 27.5 million% since 2012. In comparison, even the Nasdaq looks like a loser, having lost 99.94% points of its value against Bitcoin.
So here is Bitcoin since 2012, 130% annualized. That includes 3 massive downturns. Ethereum is at 113 and Solana at 142. Bitcoin since 2012, a return of 27.5 million%. Again, nothing has ever even come close to that. Then look at the Nasdaq compared to Bitcoin. It has dropped by 94%.
Crypto is like a supermassive black hole that overshadows all other asset classes. Raoul Pal emphasizes that the loose monetary policy of central banks is driving this trend. Since the institutions want to support the financial system, new liquidity is constantly flowing into the markets, a tailwind for riskier assets like crypto and, of course, Bitcoin. And the current volatility is part of the game. And investors need to learn, or must learn, to endure it, in order to benefit from exponential growth in the long term. What's important, and Raoul Pal has also warned about this, is don't let yourself be blinded by short-term narratives. Accept the volatility. Think long-term. Crypto is now facing a historic turning point with forecasts of up to $850,000 per Bitcoin in the near future, supported by massive liquidity injections and the unstoppable debt cycle. That's why it's so important for us to take action now. Click the link in the description below the video, watch the other video for free, and listen to what Raoul Pal had to say.